Hello folks, it is October the 2nd. It's Sunday. Let's jump into the charts. Here's gold in the monthly time frame. So we've still got price holding on to this potential support. We've got the lower median line extension of this shift pitchfork, and then we have a horizontal support resistance level. This is a continuation pattern. And according to Edwards and McGee, which that's the Bible for technical analysts, the flag always flies at half mast. And so this is our flag, this is the mast. And if we duplicate that mast, it gives us a target at 2550, 2600. So we'll call it 2600 for the round number. MACD is in bull mode, which again suggests that the primary trend remains up, and currently on a sell signal, energy is low. Gold in the weekly time frame currently in the last week, bounced off of this horizontal, we'll call this a minor support resistance level. It's never really been tested as support. So minor level at best, but we did get a bounce there, and it looks like, it looks like we've got the market open, and the open is at or just above the close of last week. So nice open to this week's market. MACD is in bear mode, currently on a sell signal, and energy is low. So again, potential for bouncing off the support level, but obviously we've got resistance overhead, several layers of resistance overhead. In the daily time frame in gold, we reached the lower median line of this modified shift pitchfork, got a nice bounce from there. That must have been Wednesday, and pushed up to the 20-day moving average before pulling back. We did get a new buy signal in MACD. MACD currently in bear mode, but a fresh buy signal. Energy just below mid-range. So looking good there in the daily time frame. Potential for higher prices in the coming week. Silver in the monthly time frame, flirting with this support level, both the horizontal support resistance level, and then lower median line extension of this modified shift pitchfork. And again, we've got our open, and the open for this week's, or actually this month's candle is at or just above the close of last month's candle. So again, silver hanging on to that potential support level. MACD has dropped, looks like it's about half and half. Yeah, so half and half bear bull mode, currently on a sell signal, energy is low. In the weekly time frame, we've got silver, it's been flirting with this $19 round number and support. It's like 1860, somewhere in there. And again, we've got our open for the week, and it's above the close of last week. A little bit of a doji. We can call that last week's candle is a doji with a long lower tail. So somewhat bullish candlestick last week. Found resistance at the 10-week moving average and pulled back. We'll see if silver can push through that resistance in the coming week. We've got a fresh buy signal from MACD, although currently in bear mode. Energy rising, not quite to mid-range yet. Here's silver in the daily time frame, and pushed up through resistance at the 20-day moving average, was held back at the 50-day and pulled back a little bit from that level. It's flirting with this horizontal support resistance level, closed just below that level. Volume picked up a little bit. There on Wednesday, we got some nice volume. MACD is right at the zero line of the indicator, and looks like we might be close to a new buy signal. So we don't have it yet, but we may get a buy signal in the coming week. In the daily time frame, energy is just above mid-range. In the mining stocks, so this is GDXJ in the monthly time frame, it's playing with support at the bottom, the lower level of this channel. Notice that the channel is slightly upward sloping, and then also potential support at the lower side of this, the pink channel. So two potential layers of support there. Nice little bump in volume in this, again, in the monthly time frame. So got some decent volume last month. MACD is in bear mode on a sell signal. Energy is very low. In the weekly time frame, we got some nice action in the mining stocks, pushed up into this resistance zone, support resistance zone. Didn't quite make it up to the 10-week moving average. Again, we got some nice volume. That's good to see, that some volume coming back into the mining stocks. MACD is very oversold, still on a sell signal, but looks like we may get a buy signal here shortly. Energy rising up from the low level. In the daily time frame, we've got the mining stocks. Looks like they've broken through resistance at this. This is the second median line extension of a modified shift pitchfork. Got a breakthrough that was on Friday, got a breakthrough, and also pushed through the 20-day moving average and closed at or just a little bit above the 20-day moving average. And we've also got a new buy signal in MACD. So again, some nice action in the mining stocks. Energy rising and coming up into the elevated zone. So nice action in the mining stocks. Now, our U.S. dollar. So U.S. dollar reached our target, actually reached almost 114.745. That was the high. So almost made it to 115 before pulling back. Notice that closed right at the 112 level, which just coincidentally is the first median line extension of this shift pitchfork. MACD is not quite at the oversold level. And of course, MACD doesn't have to stop at that level, but wouldn't be surprising if it did. But anyway, based on MACD, there is still upside potential in the US dollar. Energy remains very elevated. Here in the weekly time frame for the dollar, we can see price poked up above the top side of this. This is the first median line extension of this Andrews pitchfork. Pulled back from there, finding support along this is the upper median line of that Andrews pitchfork. So just bouncing between those two levels. A little bit of a bearish candlestick. You know, it's got a long upper wick, red body, so that is a bearish candle. But I'm not expecting this to be a top. I think we're just seeing a pause in the dollar. MACD is in on a buy signal in bull mode. Excuse me, getting tongue-tied here. In bull mode on a buy signal, energy is very elevated. So in the daily time frame, we can see we got a pretty sharp pullback in the dollar. Not quite to the median line of this modified shift pitchfork, but close. And notice that it's we got a big bar on Wednesday, and then, you know, this is a sharp pullback. That's my point, is that we got a sharp pullback. This doesn't look like a sustained correction. You know, this would be more of a sustained correction, you know, slow and steady movement to the downside. This looks like a sharp pullback, which to my eye suggests that it is counter trend and that price will turn back up and head higher. Now notice here in MACD, I've been pointing this out, these prior highs and lows in MACD oftentimes show us levels where price will reverse. And so that's exactly what we're seeing here. MACD reached the level of these two prior highs and then rolled over. Price rolled over. Price rolled over along with MACD. And so this doesn't always occur, but it's often enough to pay attention to. So we probably need to see the dollar work off its overbought condition and do some sideways bumping. Maybe it pulls back all the way to the 20-day moving average. Still on a buy signal and in bull mode in MACD. And as I said, I suspect this is just counter trend rally and that the dollar is still going to head higher. Part of the reason I say that is by looking at the euro. Again, this just looks like a counter trend rally in the euro. We've got a sustained downtrend going on, and obviously the euro is very oversold, and so not surprising that we would get a bounce, a counter trend rally. Notice that it reached the daily time frame, so reached the 20-day moving average and then rolled over, and appears to be continuing to roll over. MACD in bear mode on a sell signal, energy just below mid-range. This bounce was based on, I believe, the Bank of England flipping from tightening mode into quantitative easing mode. So one of the things that happened last week was the Bank of England announcing an unlimited bond buying program. So Bank of England is back in quantitative easing mode. They're going to print as much fiat currency as it takes. But I expect that this will be a short-term bounce, and we'll see the euro head back lower, which of course will send the dollar back higher. And same thing, this is the pound, and again, was already bouncing. This was, let's see, Friday, Thursday, Wednesday. Yeah, this was Monday. So already bounced Sunday night, Monday morning, and then with the Bank of England announcing its, quantitative easing, we got a rally in the pound. But again, I suspect that this is nothing more than a counter trend rally that will quickly fizzle out and roll over. And part of the reason, it's the same thing I was saying about the pullback in the dollar. This is not a slow, steady, sustained move. This is slow and steady. This downtrend, slow and steady, with a sharp drop and a capitulation and a bounce. Now this is a sharp, fast, impulsive move, which is indicative of a counter trend rally. So anyway, it's not going to surprise me to see the pound roll over here. And so both the euro and the pound rolling over will definitely send the dollar back higher. And we may see that as early as this coming week. So in the debt markets, this is the 1-year Treasury bill, the yield on the bill in the monthly time frame. Notice again that we're increasing the size of this box because interest rates keep rising. We did get a little bit of a pullback at the end of the week, end of the month. MACD remains in bull mode on a buy signal. Energy is very elevated. The yield on the 10-year note pushed up to resistance at the upper median line of this shift pitchfork before pulling back. This could be a topping candle. It's a doji close. The body of the doji is below the upper median line there, so clearly found resistance there. But notice that MACD is in bull mode on a buy signal, energy is very elevated. So would not be surprised to see interest rates heading higher. And of course, I believe that that is the natural trend for interest rates at this point, is they are heading higher because there are no natural buyers for government debt. That we've got a global debt collapse happening. Nobody wants to buy government debts. So we actually had two bond auctions last week, U.S. Treasury auctions. It was the 2-year, I guess that's 2-year note, and the 5-year note. Both of them failed. And of course, the way the U.S. has their auction set up, they can't actually fail. There's no way for a U.S. Government debt auction to fail because we have direct bidders. They are required to bid on all debt offered. So we'll never have never say never, but the way the system is set up, we'll never have an outright failure of U.S. debt sales. But the only reason those two auctions didn't fail, I think it was Tuesday and Wednesday, is because of the direct bidders. Now on Wednesday we had an auction of 7-year. I think that's still a note at 7 years, and it was a successful auction. But that was the same day that the Bank of England did their pivot to QE, so not surprising that that auction went off better than the Tuesday and Wednesday auctions did. So yield on the 30-year Treasury bond, weekly time frame, pushed up into resistance. This is the first median line extension of this shift pitchfork, pullback from that level. But again, this is the same thing we saw in the monthly chart of gold. This is a flag pattern, and it gives us a target up here at call it 4.5%. MACD is in bull mode on a buy signal. Energy is very elevated. So reasonable to expect higher interest rates in the 30. Here are the interest rates on 30-year fixed mortgages, 7.5%. So mortgages just keep ticking higher, which of course is causing stress in the real estate markets. Bitcoin, crypto, not catching a bid, having a hard time catching a bid. Just kind of bouncing along this horizontal support level. 20-day moving average acting as resistance, currently on a buy signal, but in bear mode. Energy is very low. Happened to notice in the past week this article, NFT trading, which, is another flavor of the crypto assets. Volume has plunged 97%. And so, at some point, when markets just keep going sideways, people give up, lose interest, move their money elsewhere. And so, crypto unable to rally, and so people are giving up on it, temporarily moving to other markets. But that's a pretty dramatic collapse of volume in NFT. And of course, NFTs are digital beanie babies. I mean, you can say that about crypto, but crypto at least tries to provide some utility, and certainly there are people out there that argue that there's a place in the world for crypto. I don't believe it personally, but I can at least follow their arguments. There is no argument that NFTs have any value. These are definitely digital beanie babies. So equity markets did not do well last week. Got a little bit of a rally on Wednesday, when the Bank of England pivot kind of elevated all of the markets, got a little bit of a bid there, but by Friday had lost that bid, and then noticed the break below this horizontal support level and a decisive break below the first median line extension of this shift pitchfork. Notice also that price closed on or very near its low. Let's see, where did it close? Closed at 35.85 and the low was 35.84. So closed less than a point off of the low of the day. And so that's a very bearish indication, reasonable to expect price to head lower. MACD is in bear mode on a sell signal. Energy is very low. In the weekly time frame, so we got a push through this support level, support resistance zone, minor resistance. Yeah, so anyway, support resistance zone, pushed through and again closed very near the low, actually at the low, closed at the low of the bar for the week, which again, bearish indication. New MACD sell signal in the last 2 weeks. Energy is very low, so this certainly looks like a chart that is headed lower. S&P in the monthly time frame, notice that we are firmly back into bear mode, and price at the end of the month closed below this horizontal support resistance level, that 24%. Price closed, was it at? Yeah, again, price closed at the low of last month. So that's a very bearish indication in that candlestick. And notice as well, this series of candlesticks is a change in behavior. You know, just look at it visually. We've got this long, steady uptrend. You know, that's 10 years of uptrend. We got some sharp pullbacks, but, you know, as I've said a couple of times already, these sharp pullbacks are counter trend. These are counter trend moves. They're impulsive, and then price reverses and continues in the direction that it was headed in the first place. This is not a sharp counter trend movement. This looks like a sustained movement to the downside, firmly in bear market mode. MACD remains in bull mode, but on a sell signal, energy is very low. So S&P not looking good. Here's the Dow in the daily time frame. Same thing we just saw. Price broke below support at the lower median line extension of this shift pitchfork, pushed down through most of this support resistance zone. Price closed, was it at, let's see, 725? Yep, closed at the low of the day. So bearish close on Friday suggests that we may get continuation to the downside on Monday. MACD in bear mode on a sell signal. Energy is very low. In the weekly time frame, same as the SPX, pushed down through the support level, support resistance zone, closed on the low of the week. Is that true? Yes, closed on the low of the week. MACD in bear mode on a sell signal, energy very low. So not a pretty chart in the weekly time frame. And in the monthly, that's certainly not a pretty chart. And the same thing applies, as I was just saying about SPX. If we back out and look at this 10-plus year uptrend, punctuated by some sharp counter-trend rallies, this looks different. Visually, this is different behavior. This is a change of behavior in this market. And I would suggest that it's a shift from bull mode into bear mode. We're firmly, based on the 20% correction or more is bear market. I would suggest that visually we are back in bear market territory, which we haven't had a bear market in a long time. At least 2008 since we've been in a significant bear market. Of course, we had the big scary plunge in 2020. So price last month pushed decisively into this support resistance zone, closed at the low of the month. MACD still in bull mode, but on sell signal, energy very low. NASDAQ on Friday pushed below support at the horizontal level. Still finding support on the lower median line extension of the shift pitchfork. We'll see if that can hold in the coming week. MACD is in bear mode on a sell signal. Energy is very low. Weekly time frame, NASDAQ pushed down into this support resistance level. Bearish candle closing at the low of the week. So bearish indication. We've got a fresh sell signal from MACD, and MACD is in bear mode. Energy is very low. So not a pretty chart in the weekly time frame. Clearly here in the monthly time frame, in bear mode. Same thing I said about the other two markets. Visually, this is not a counter trend movement. I would suggest that this is a change of behavior. This market has changed from bull mode that it's been in for, I don't know, 10 years, 12 years, and is now changing or has changed into bear mode, bear market territory. And of course, we've got this parabolic curve, which if price pushes below this parabolic curve as support, we're likely to see another 20% drop down to this next support resistance level. So equity markets not looking happy. MACD is still in bull mode in this monthly time frame. On a sell signal, energy is very low. Brent crude, oil continues to pull back. We continue to sell oil out of the SPR. Got a new sell signal in MACD, although MACD is still in bull mode. Energy is about halfway at the current time. That's it for the charts. I'm going to let you go. Have a fantastic rest of the weekend. Enjoy this coming week. It should be it should be interesting. Talk to you soon, folks.